Hello, this is Matt on the Moon Lambo channel, and the market dumped today. But that's okay, things don't go straight up in terms of price action, so this is kinda to be expected. A little bump in the road. So what are the analysts saying? Well, I've got opinions from a number of different traders and chart analysts. I'll tell you, it's not the outlook that I'm seeing from most of them. Not too bad. It seemed like a pullback was, like I stated, it was inevitable. And I'll tell you the ranges they're expecting it to potentially go to. Now, if it breaks below the support level, things could get a little messy. But I don't think that, I'll just tell you up front before I even get into the specifics, most chart analysts that I've been following, they don't seem to think that's the direction things are going to go. In fact, it seems to be increasingly clear that the general sentiment around the crypto asset class is that the bottom is in. It's already occurred. And so, nobody can state that 100%. Let a lot more time pass, and you can say that more definitively. But if that's true, that's really something. And we've still got XRP fine. It got down to 18.3 cents was the lowest I remember seeing it anyway. Maybe got a little lower. But, man, it's still, think about this. You can still get over 4 XRP for $1. What a deal. So it's still, to me, it's still a pretty good opportunity. But I want to be clear, I'm not offering financial advice because I do not have a financial background. I'm just happy to share opinions, but just an XRP enthusiast here. Nothing more than that. Don't buy or sell because of me. That's a bad idea. Anyway, before we go any further, if you would please delicately tap that like button. And if you're a fan of Ripple and XRP, go ahead and subscribe to the Moon Lambo channel because there are worse ways to spend time, like watching goat videos. That's not good. Who's watching goat videos? All right. So the market cap for the crypto asset class, $234 billion. You got Bitcoin at $86.50, XRP at 23 cents. And again, here's the 24-hour chart. You can see it all happened rather quickly. So what caused all this? Well, don't you worry. Your boy Moon Lambo got you covered here. We're going to talk about that. So here's the theory here. This is from You Today, crypto media outlet, and it's titled "Updated Bitcoin Price Dump Explained. Here's what happened." Excuse me. Update. The price of Bitcoin is currently changing hands at 8,631, CoinStats data shows. The leading cryptocurrency has barely budged since its precipitous drop that was recorded earlier today, which means that more volatility could be in store for traders. Today we have seen the first volatility spike of Bitcoin price within the extremely bullish market of early 2020. It had been predicted. Moreover, now it's explained. Recently, Deribit Futures and Options Exchange revealed the market manipulation that caused today's rapid price decrease, and it occurred at 11 a.m. UTC exactly. Someone shorted an enormous sum of $101 million in Bitcoin perpetual contracts, BTC USD, between 11 and 11:10. That's how the market responded. You can see it was pretty instant. The response, it began pretty instantly. So anyway, thus the most stunning bearish spike of this January is caused by the market dump of some Deribit whales. So was the bubble predicted? That's the subheading here now. So-called CME gap, or the bubble of the BTC USD futures market, had been mentioned by Dutch analyst Michael van der Pop 2 hours before the dramatic liquidation. And here's the tweet. We broke above $9,000. That's a good sign, but we'll be creating a CME gap through that. If we lose $9,000, the bearish divergences are applied, and I aim at 8,250 to 8,600 as main long zones. Another wick first in $9,400 is also on the table, just a scenario. And so there you go. All right, next, top 3 price predictions. Bitcoin, Ethereum, XRP. We're just going to go talk about XRP, though. So let me scroll down a little bit here. This is by chart analyst Denis Sarachuk with crypto media outlet You Today. All right, XRP USD. Even though XRP has broken the long descending channel, its long-term scenario remains bearish. At the moment, the rate of the coin has decreased much less compared to Bitcoin and Ethereum. XRP is located within the wedge figure with the upcoming downward movement. The blue line of the MACD indicator is about to change to bearish, and that will confirm the bearish sentiment. All in all, the coin might come back to the critical 20-cent mark at the beginning of February. XRP is trading at 23.06 cents at press time. So short-term bearish, but we'll see though. It's following Bitcoin still, so. All right, next, Bitcoin and altcoins approaching largest cycle yet. Bitcoin heading to $100,000, says crypto analyst DataDash. And I like this guy. He's got what I believe is the largest crypto channel on all of the YouTubes. Crypto analyst Nicholas Merton, that's DataDash, says Bitcoin and the altcoin markets are just getting started. On a new episode of DataDash, Merton says he believes Bitcoin will hit $100,000 in its next cycle and will increasingly get exposure in the mainstream as it breaks through its previous all-time high of just over $20,000. And here's a quote from him. My idea here is that Bitcoin, as well as other cryptocurrencies, have yet to go through their largest cycle yet. To really take this asset class from a kind of niche community where it is right now into the broad institutional world of retail, in this case, retail meaning everyday people, how can we expect that in the next 2 to 3 years we're going to see this happen? It's important to understand that there are a lot of misconceptions when it comes to observing Bitcoin. A lot of people look at Bitcoin's price and they think there's no way it can go higher than it is now. And that's a very big misconception because you should never be focused on price. Now, if price is going up, that's good. It means that your investment is going up, but the problem is that you have to look at something known as market capitalization. From that cycle, we had a valuation, talking about, let me just read this part. So Merton says a comparison between the crypto markets and the dot-com bubble offers a glimpse at how Bitcoin's market cap could go along. Yes, sorry, I lost my place for a second there. Here's the rest of his quote now. From that cycle, we had a valuation of about $17 to $18 trillion at the peak of the dot-com bubble. This is very important and significant to take into mind because we're talking about equities. And the important thing to note about equities is they are dwarfed by currency markets. And that's what cryptocurrencies are. They are an emerging currency and speculative asset class. So you get all the great speculation of assets like you did with tech stocks, but you also get the absolute size and scale of currency markets and storing value. So it's kind of a hybrid between three markets, I'd say. You get the store of value aspect that we've seen in gold and silver, which is about $7 or $8 trillion market today. You get the speculative room that we got in the dot-com bubble and what we could see generally in equities. And you also get the fundamental ability to be seen in a currency in this case. It's a win-win in every case for Bitcoin and how it's perceived by the world and how it's serving as this kind of native asset for world commerce, for world store of value, for a little bit of speculation and hedge against the fear in the world with everything being overinflated in value. So there's all these benefits for Bitcoin. Now, I'd say specifically, this is my opinion, I'd say that more so applies to the crypto asset class because I'm not convinced that we know in 2020 which cryptocurrencies are going to have staying power, and I'm skeptical that Bitcoin would be one of the cryptocurrencies that will have staying power because of my entire investment thesis, which is that utility matters and will win the day. Bitcoin, frankly, just isn't getting used for anything, but it's fun to think through. I want to point this out. This is going to be real short with this, but there's an analyst I cover on this channel fairly frequently named Phil, and he writes for Cointelegraph. And he put a link out to something that he put out. This was June 6th of 2018, and he was just pointing out that he got a long-term call right, which, where's the part I wanted to cover? Here we go. Yeah, down here. And again, so this is summer of 2018, and he wrote this. I expect, and mind you, we're in the bear market, but Bitcoin had not gotten to its low. Its low didn't occur until, I guess it was December, maybe it was mid-December, somewhere there, about December 2018. So he wrote this. I expect the accumulation phase to occur largely in the $3,800 to $5,800 range, below where the market cheerleaders currently are calling. The main reason for this is purely based on historic market performance, which is critical to this model, and because everyone thinks the bottom is in, meaning we probably have some way to go because it's easy to sense it's out of its bias rather than logic. Earliest I expect this period to end would be the end of 2018, and the latest could be towards the end of the second quarter of 2019. And he was pretty darn close because the low for Bitcoin, I think it was somewhere around more like 3,300, but he was not far off. And the timing, he kind of hit it pretty much on the head. It was, maybe it was mid-December. That's from the best of my recollection, 2018, but that's strikingly close to what he said. So I don't know. I thought it was something, so interesting enough to worth sharing it for you. He didn't have a new update today, but he put that out today. I just thought, interesting. All right, here's a tweet from Lub Crypto. 2 tweets on the screen right now. The first one was from January 16th, and he wrote this: XRP pullback to 21.2 cents is healthy. Bitcoin pullback to 8,200 is healthy. Ethereum pullback to 154 is healthy. And then he retweeted that today and wrote, still holds, nothing has changed. So outlook, not any different. Here's another tweet. This one's from today also. And he wrote, I charted the XRP monthly using the Fibonacci retracement tool with the log scale option turned on. And in parentheses he writes, retracement taken from the very beginning of the 2017 bull market to the very top. And then he writes, suddenly things make more sense, especially 13 and 7 cent targets for XRP. Then he writes, I won't chart it anymore, with a little cry and then laughy emoji there. So according to that, 13 and 7 cent XRP on the table. Now here's another chart analyst that saw that and responded. And he writes, and this is Wooston, I cover him on the channel from time to time. He wrote, because somebody named Street Bandita wrote, I hope you're wrong. Wooston responded and wrote, he is clueless about Fibonacci retracement. He mentioned the 50% it's not present on Fibonacci sequence. The 50% is Dow theory. So there you go. So one chart analyst thinks it makes sense and another does not. All right, next from DIY Investing. This correction's market structure reminds me of when we were at $4,500 to $5,500 Bitcoin. Unless we sell off below $7,700, what are you worrying about? So, yeah, and that's a level. He's not the only one to cite that level. I think I had another one in this video coming up. I believe I do. Next, from DIY Investing, Ethereum giving me early vibes of the Bitcoin breakout at $4,000. I think the current setup we're seeing shows we still have more upside to come. Don't get shaken out of the early portion of the market cycle. Hold. Now, why am I mentioning Ethereum? Well, there are many that believe, and I think there is actually evidence to this, that Ethereum is what got the last alt cycle going, which ultimately led to a tremendous run-up in XRP price. Even though it ran later in the altcoin market cycle, it still happened here. And so there are traders out there, and I haven't mentioned this on the channel as well, that there's traders that think, just wait for Ethereum to pop. That's going to be the indication that this alt season is really getting going. So we shall see, though. Next, from Josh Rager. Bitcoin pullback should be expected. The important thing to keep an eye on in this market structure the important thing to keep an eye on is the market structure and the trend change. Price would likely bounce at low 8,000s. Unless price made its way down past 7,700, I wouldn't worry. So there's 2 traders that are basically saying the same thing right there, DIY Investing and Josh Rager. I don't know if one read the other stuff, but they're pretty much saying the same thing there. So low 8,000s makes sense. If we go below 7,700, we got problems. But they don't seem to think it's likely to occur. But anyway, that's it for this video. Thank you very much for stopping by, my friend. I am not a financial advisor. Do not buy or sell anything, because if anything that I say I write, that would be a very, very, very bad idea. Until next time, to the moon, Lambo!